Good evening, everyone. I'm Tejas Vaiti from Kirin Advisors. Welcome to the virtual roadshow of Carbon Steel Engineering Limited. Today, we'll provide a brief overview of the company and its innovative business model. Carbon Steel Engineering Limited is a structural engineering and fabrication company engaged in the design, manufacturing, and assembly of heavy and precision steel structures tailored for industrial and infrastructure sectors. From the management team, we have Mr. Shrenik Shah, Chairman and Managing Director, Mr. Ganesh Bhandari, CFO, Mr. Satish Thakkar, Technical Director. Good evening. I welcome you all to the IPO meet. From Seren Capital Private Limited, we have Mr. Gautam Lat, Director. Good evening, sir. Welcome. Now I hand over to Gautam, sir, to tell us the journey of the company. Over to you, sir.
Thank you, Tejas. So let me first welcome each one of the investors who have joined today. Thank you so much for joining for the live, virtual roadshow of Carbon Steel. I am sure you'll get to know the company and we'll see all of your name, as an investor throughout our future journey. So Carbon Steel is a technically, a very heavy structural and technology company, I would say. The company has done few very marquee projects which very few could achieve in this country. Few of them is they have fabricated and manufactured the entire one of the very largest bridge of bullet train which was in news. So that's what they did. And the second is which I believe that again a miracle thing is the lifting mechanism of Atal Setu, as we all have heard about Atal Setu. So the company is in heavy steel fabrications or heavy steel technological precision structures. So whatever you can think, imagine of that, whatever a heavy structure or precision structure can be made of steel. I believe that the company has technology to make this in country. So that's a very brief introduction about the company. I would quickly hand over to Shrenik Shah, who is the managing director and founder of Carbon Steel. So he can guide through the journey, what are the visions, what are the plan of the company, what we would like to do with the IPO proceed, and how we see the company growth in future. So Shrenik ji, over to you.
Right. Thank you, Gautam, for the lovely introduction. And thank you, all the viewers, for joining us today. Uh, I'll start from where Gautam ji ended by giving you a little bit brief history about the promoter family and the promoter history. So my family has been in the steel business since the 1980s. We have been historically doing shipbreaking in our family concern. We were also importing a lot of steel into India back in the early 2000 when steel used to be shortage in the country. We were importing steel from ArcelorMittal, various global plant locations, and bringing them into India. And I joined the company after finishing my education in the US around 2005, and that is where the roots of carbon steel engineering took place. We met a lot of engineering companies while supplying steel. They taught us how to do value addition and try to give all the customers steel which is ready to use rather than just basic raw material. So our first venture was as small as giving profiles and cut to size shapes as per drawing to our customers. Then they taught us how to use our existing supply chain and try to give contract manufacturing instead of just supplying steel. So the first couple of projects we did in contract manufacturing in Bhilai, Raipur area, we ended up supplying for an IOCL refinery job in the Jharkhand area. So carbon steel sort of got the first taste with this contract work, and also we were fortunate to get some qualifications by doing this job in our name. And that is how we conceptualize our first manufacturing facility in Khopoli, Maharashtra. So based on the credentials that we got so far, we got a direct job for for a refinery in Punjab, and we supplied about 3,500 tons of pipe rack structures for that job. Eventually, that job got us further jobs in one of the steel plants, which is very near to our Khopoli plant, for a very prestigious steel manufacturer, and we supplied almost 25 to 27,000 tons of structure directly to the end users and through their EPC contractors. So that is how our initial days, boost came from the refinery and the steel sector. Encouraged by that, we planned to put up even a bigger facility than what we had in Khopoli. Khopoli had some limitations in terms of availability of land. So our second facility came up in 2016 in Umargaon, where we started commercial production and supply from early 2017. And from there, we have done number of projects, marquee projects, like Mr. Gautam mentioned, in various sectors that include steel, infrastructure, railways, chemical plants, refineries, of course, and then also high rises and industrial structures. Today, the facility is 20 acres big, just in Umargaon, and the historical Khopoli facility is still there. Combined, they give production of about 36,000 tons per annum, which we clearly plan to expand much more, looking at the encouragement that we are getting from our clientele and the projects that we see in the market. Can you, Ms. Tejas, can you please put on the slides so that I can better explain some of the industries and products that we do?
Yes, sir. We'll start with the presentation.
Yes. So yeah, like I mentioned, steel plants, we have done a lot of jobs for ArcelorMittal. We have done a lot of other steel manufacturer plants as well. Specifically, we specialize in heavy fabrication. So in terms of buildings and application where loads are in excess of 200 to 400 tons, our buildings are designed to handle that kind of capacities. Just to name a few buildings: blast furnaces, smelter shop, coke oven plants, sinter plants, galleries, and many such other utility buildings we have delivered for steel plants, and we continue to do that in this financial year and coming financial years as well. One of the major steel plant has announced a 30,000 crore capex around our Khopoli plant, so that should be at least 2 years of horizon and work available for us to participate. Coming to railways and metro, we have done two spans for the bullet train line from Ahmedabad to Mumbai, for one of the most leading engineering company in India, and we work with very close quarters with them, almost in line to even get a monthly MOU for them, so that they are able to buy a fixed amount of capacity from what Carbon delivers today. I would really like to highlight the bullet train project because it's an engineering marvel in itself. Uh, Less than 6 mm tolerance was allowed on the whole project. We achieved it under 2 mm. I think in India, two or three workshops other than Carbon are qualified to do this kind of work. So we are one of those few who could get qualified, and our experience with handling heavy structures has basically helped us get that job. We had no prior railway experience before doing those bridges, so it has really been a top-down, development for us. And client and our Japanese principal who brought this technology and transferred to us has put a lot of faith in us, which we have come out successfully just because of our technological capabilities of handling single module or a single component which can weigh as much as 40 tons in terms of handling and fabrication capabilities. Apart from that, we are currently now we've got RDSO certification based on the two bridges that we delivered. On those bases, now we have regular railway work, which we are also doing. Recently, we've got awarded two bridges in the Vapi area and the Umargaon area itself. So that is on in the pipeline. We'll be manufacturing it from in the coming months as well. Moving on to the next sector, oil and gas. Traditionally, it has been our bread and butter. We have worked in Numaligarh, Assam. We have worked in IOCL Paradeep. We have worked in Bathinda Refinery. We worked in Rajasthan Refinery. We have worked in Dhumad. We have also worked closer to home in BPCL, HPCL sites, of course, through various EPC contractors or in sometimes directly engaged with the client. But we are, quite capable in handling pipe racks, cracker units, again utility buildings, then chimney structures, platforms, and all sorts of other technological items for refineries as well. And we continue to do work in that field, and for further expansions are due in that sector. So we will see carbon participating more and more in those sectors. Chemical units also we have worked for two or three leading chemical manufacturers. We have done their units in Jagadia, then Silvassa, and also in for other places in Gujarat. So chemical and also in Maharashtra. Some of them will not be able to name, but we have made number of buildings for chemical units as well, including in some cases we have done the piping and even tanks for them, making us capable of making even skids or modular units for wherever fabrication requirements are there. And last but not the least, the high-rise buildings, the very exciting sector for us. We have done showrooms in Bangalore, and we have done high-rises in Hyderabad. We have even done data centers here in Navi Mumbai, and we are continue to bidding for high-rises both in Bombay and Pune. I think with the mantra of smart cities, sustainable development and clean construction techniques, we'll see steel being used more and more as a material of choice. And if any building can be envisaged in steel, and which is also bearing a lot of load and pressures, both environmental and wind, we are capable of delivering such projects with a lot of precision and getting it right the first time. Even industrial buildings, we are making the heaviest building. It is a current project that is going on. We are making for our client Tata projects. We are making a EV battery unit for them in Sanand. The heaviest building is with carbon, so we are, all these new sectors are also very exciting when it comes to EV batteries, or nowadays semiconductors are also very much in the news. We hopefully will also get work going forward in similar sectors where we can showcase our technical strengths. Moving forward, I will like to talk about the product offerings. I think I've given a fair idea of what we do, but broadly, if we were to categorize them, heavy steel fabricated structures are basically categorized as load-bearing structures or buildings, such as columns or examples of building like blast furnace, mentor shops, where you are, the entire load of the building is being transferred, and they are capable of withstanding those loads with a lot of precision and reliability. So we clearly specialize in that. When it comes to technological structures, are basically precision structures that work around processes or live processes, machinery, or flow of material or liquids. So they are around. They have to be made with a lot of precision and very low tolerance to any deviation, as they interact with moving parts of a given process or plant. So in those cases, we are delivering very precision and high quality structures, both to refineries, steel plants, and a lot of other industrial equipment manufacturers, with a lot of success. John Cockrell is one of our clients who regularly buy technological structures, and has successfully delivered a number of cold rolling mill plants to number of steel users. Just to give an example, in that sector. Steel bridges, of course, we discussed the bullet train bridges, subsequent the RDSO approval that we've got, and now we are also doing couple of bridges for RDSO, and we continue to bid in that sector. Hopefully, we'll get more jobs. One of the, of course, motto of doing the IPO is going to be expansion of our railway division, which we will talk about later in the slide. Pre-engineered building, like I said, we are currently doing a EV battery unit for one of our clients. Also, we have done warehouses for our local vendors in Vapi and Umargaon area, for a leading stationery manufacturer, and also for pipe manufacturer. And we see more opportunities coming that way as well. A lot of industrial building requirements are coming up specifically around the unit at Umargaon. A lot of growth is expected going forward. And about the manufacturing facilities, we have two units. The historical one, which is in Khopoli, is still in the original size because of some land limitations. Uh, but also very significant and strategic, very near to steel plants, very near to port, very near to Bombay and Pune city locations. So very strategic for us. Umargaon is of course a bigger unit, about 20 acres. So the current planned expansions are in the Umargaon unit, where we intend to start the railway division and also augment some of our production, so that we can take advantage, maximum advantage of the order book that we currently have. And of course, the RDSO approval is on the Umargaon facility. So it is only there for Umargaon for the time being, and the combined capacity for Khopoli is 6,000 tons in Khopoli, and then 30,000 tons in Umargaon. So combined capacity is 36,000 tons, which we intend to increase to close to 48,000 tons once we do the current round of capex, or the rather the planned round of capex. Can we go to the next slide, please? Yeah, just reiterating some of the things I said about 8.25 lakh square feet of area available in Umargaon, out of which we have built about 2.4. We are going to build further in this phase, and then probably plan more phases eventually. Strong order book, about 330 crores is in hand, as we discussed today. This is not including the order that we already executed this year. So a healthy order book, and that is the main reason why we have decided to do the expansion. And since last 2 years, our growth has been quite healthy. From a modest 155 crore revenue, we've ended FY25 at 273 crores. So robust growth, and we feel that the momentum is there, the order books are there. So hopefully we'll be able to continue to do the good work. Can we go to the next slide, please? Yeah, this is our timeline. 2011, Carbon was formed. 2014, after getting some experience in contract manufacturing, we started the Khopoli unit, did our refinery and steel plant jobs there. Then from there, we put up the second facility in 2017 in Umargaon. And from there, we have never looked back. As you can see, our revenues from a modest 100 crores in 21-22 have now almost tripled by the end of FY25. And lastly, just a mention again of the bullet train project, which is requires a mention again and again just because of the engineering marvel. It is a simply supported bridge with no columns in between, and with a lot of effort, we have delivered that successfully. The first bridge took about 10 to 12 months, and the second bridge, even though it was a longer span, took half the time. So we've done pretty good in terms of efficiencies and learning the know-how when it comes to making bridges. Can we go to the next slide, please? This is our management board of directors. I clearly introduced myself. I have more than 20 years of experience in the steel and allied industry. Miss Mittal Shah is handling our HR and admin. She is the one who owns our engineering skills and brings the right mix to the team. And she is maintaining our engineering edge and making sure that our team is always motivated. Mr. Saurabh Bansali is a chartered accountant. He's also part of our team. Mr. Mihin Halani, he's a leading CS in the field and also part of our board of directors. Mr. Sunil Kataria is a stalwart in the steel, structural steel industry, has been part of the Jindal Group and personally in his career erected more than 1 million tons of structure. So he provides a lot of guiding principle to the team. Can we go to the next slide, please? Some of the photographs that we of the products that we have made. I'll start with heavy steel since it's our marquee projects and work. The first photographs that you see is of the accumulator structure that we made for John Cockrell. It was assembled at our workshop before delivering it to the site. Uh, the remaining two photographs are for the steel plant that we have made for ArcelorMittal, the blast furnace and the smelter shop. The precision fabricated steel structures that you see are basically structures that are revolving around machinery and piping. They are representing various refineries and chemical plants that we have made. The top left hand corner photograph is the bullet train bridge that we had assembled at our workshop before delivering to site. It was really a happy occasion for us and a proud moment when we finish the project. It should be launched soon and probably will be featured very soon. The left hand corner is the PEB that we have made for a local stationery manufacturer, and we continue to look for heavier building in that space. If that opportunity arises, we will participate in PEBs as well. Can we go to the next slide, please? Yeah, these are our financials. I will ask Mr. Ganesh Bhandari to talk a little bit about them.
Thank you, sir. This is the product mix and revenue share. Here you can see that from FY23 to FY25, we have doubled our revenue from 155 CR to 273 crores. And our main sector was heavy steel fabricated structures. And going forward, we are also focused on steel bridges.
Can we
Can next?
slide, please? Yeah, some more photographs of our Umargaon unit and Khopoli unit. The top end is the aerial photograph. The one below is one of the bays. The box section there is for one of the high rises that we build in Hyderabad. The Khopoli unit, like I mentioned, is our first unit and still does a lot of jobs for both exports and local market and high rises. We have two warehouses in Kalamboli. The reason we maintain that is because a lot of steel come by rail racks from Jindal and SAIL. So we are able to save a lot of on logistics cost and distribute to both our plants from our Kalamboli warehouses. Can we have the next slide, please? Some more photographs. We have designed our original plant in the Indian tricolor. It is green, white, and saffron. Uh, we are proud to be Indian and we want to build products and buildings for our nation. So that goes in our building philosophy as well. The right and bottom, you see a structure that was the lifting mechanism that we designed for the Atal Setu bridge. Uh, and of course, there are some more outside photographs of the storage and dispatch area. Can we go to the next slide, please? Yeah, this is the capacity of the plant that we were talking about. Umargaon at 30,000 tons per annum and Khopoli at 6,000 tons per annum. The utilization is quite high in Umargaon. In Khopoli also, this year it has touched close to capacity levels which we see in Umargaon. But of course, previous year it was around 62%. And the plant expansion that we are currently doing as part of the IPO, we are going to bring the 30,000 metric ton per annum uh, production capacity of Umargaon to 42,000 metric ton per annum, and combined it will be 48,000 metric ton per annum. Can we go to the next slide, please? This is the planned capex. Shed 1 is actually the railway division that we intend to do. Based on our RDSO approval, we are able to do FOB, ROB, open web girders, and of course the bullet train bridges going forward. So this building is going to take specific requirement of railway in mind and do dedicated work for them. And like I said, we are already bidding for new work. So hopefully, going forward, we'll see work trickle in that sense. Shed 2 is going to augment our production capacity for the order book that we have, about 330 crores order book we are currently having, which we are able to finish in about a year's time, but we want to do it sooner, and that is why we are putting up this facility. Is going to be 200-meter long with lot of automation also deployed. The idea is to put raw material on one end and then deliver finished steel from the other end and bring about a lot of operational efficiency and by minimizing handling of heavy structures in this new facility. So hopefully it will really help us bring down some of our cost parameters as well. The combined capacity, like we spoke, is 48,000 metric ton after this expansion, and year-mark capex is about 12.5 crores for this particular expansion. Can we go to the next slide, please? These are some of the jobs that we delivered this year. We spoke about the bullet train. We have done close to some big orders we have listed here. 10,000 tons from AMNS single order. Then another which is about 18,000 tons. We have also done a PEB unit for a pipe manufacturer, and we have done oil and gas work, refinery work as well for one of our EPC clients. The order book that we mentioned about 330 crores, and this project combined have been across three states. Of course, that varies from uh, project site to project sites every 2 years or something. Once we have a marquee project, this mix changes in terms of geographical area. Can we have the next slide, please? Some of our product photographs for the left hand corner we have done for Chennai Metro. The picture after that is for a data center. The bullet train bridge is the third picture which we already discussed. Some of the heavy plants that you see are the ArcelorMittal units. Uh, One of them is a chemical unit as well. The first picture in the second column, and we have done for bridges also lifting mechanism for the Vashi bridge. We have done tanks and piping also for chemical and metal units. So some photographs just to showcase our end products and results. Can we go to the next slide, please? ArcelorMittal, we mentioned, is our major client since last year. We continue to do projects for them. Tata Projects, John Cockrell, Panamatrix is a Baker U business, JSSL, Ray Engineering. Some of the clients we could name, others on the because of disclosure requirements we won't be able to mention. But across sectors we are dealing with number of clients, and it is evident from the jobs that we showcased before this slide. One of the, I think the feather in our cap is the repeat orders that we get from our clients. Almost 96% has been repeat orders. So ideally, it also showcases our strength in terms of delivery on time and also the quality with which we deliver our projects. And usually our clients take us to all the sites that they go to. So that is a achievement in itself for us and our team. Can we go to the next slide, please? The color in the brown is all the territories that we have worked in India. As you can see, the project mix could be skewed at a given point of time, but we have worked across India because of our speciality in heavy technical structures. The clients take us wherever their project goes, and the fact that we deliver such high tonnages also help them meet very tight deadlines. So irrespective of territories and projects, our participation has been almost across different states of India, and like I said, every few years the geographical mix changes depending on where the mega project or the marquee client is working at. Can we go to the next slide, please? Import have drastically reduced. So in terms of competition, it has come down because of BIS requirements. So that is additional advantage for carbon. And export markets are also opening up. We are bidding for a few projects. So we'll see how that pans out. But export opportunities are there, and we are nearby JNPT port, so it's always a gateway to number of countries around India, and we continue to look for those opportunities as well. In terms of quality, we are qualified among the best because of our delivery of the bullet train, and usually export job quality requirements are easily met by our standards based on the kind of work we have delivered so far. Can we go to the next slide, please? Some of the macroeconomic factors are also favoring the industry today. 95 kg approximate is the per capita consumption today. It is likely to go to 160 kg as per government push. We are seeing a lot of smart city projects. We are seeing a lot of thrust in the railway sector, both in terms of bridges, connectivity, and then upgradation of existing infrastructure. So we see a lot of sectors that are exciting, and probably our product mix going forward will help us, do even better in the future. Can we go to the next slide? Gautam, can you highlight this part?
Sure. So this is the listed peer comparison which we could identify. So one is the Atmastco, which is listed peer and which is trading at a 31.28 multiple. Good Luck is also a listed peer who does some kind of work which we are into it. So Good Luck does a lot of things. So they have one division which is a little similar to us. So that's about the peer performance. We can move to the next slide. So this is about the revenue, PAT, and EBITDA and PAT percentage. Ganesh, you would like to
Yeah.
take this up?
Yes. These are our revenues from FY23 to FY25, which is already discussed, 150 crores to 230 CR. And our EBITDA margin has also increased from 16 CR to 36 CR, and our PAT level is also increased from 5 CR to 14 CR over the last 2 years. Next. This is our key ratios, ROE, ROCE. Our ROE in FY25 is 27.18 and ROCE is 24. And debt equity ratio is also our improved over the last 2 years. And EPS and net asset value ratio, per share as well. Next. These are our P&L. It shows our revenue and expense breakups, finance cost, employees cost, EBITDA and PAT. Next. This is our balance sheet. Last 3 years, FY23, FY24 and FY25.
Here, I just want to highlight that in the last 2 years, we have done significant capex, which has built our capacities over the years, and because of that, we are, that is the primary reason why we are able to participate in such marquee projects based on the tonnages that we are producing for custom heavy fabrication on a consistent basis.
From last 500 metric ton per month to 3000 metric ton per month.
Can I go to the next slide?
So this is about the issue. So we are opening our IPO on 8th of September. Anchor has already closed today, and we have received tremendous response from the anchors. We might be uploading the list soon on the portal, and we are opening our IPO on 8th, and it is closing on 10th of September. The listing will happen on 15th of September, and the total issue is 37,29,600 equity shares at upper price band of 159 rupees. The IPO size comes to 59.30 crore. One thing I would like to highlight on the holding part, see both the gentlemen who are sitting in front of camera, Shrenik Bhai and Satish ji holds together 90% in the company. So see, Satish ji is a technical director and he is heading the entire Umargaon plant. due to some regulatory structure, regulatory purposes, it is not, he doesn't qualify as a promoter, so his holding is also shown as a public. Otherwise, there's a 10% which is currently held by public. We did a pre-IPO around 2 years back, and post listing, the promoter and employees together holding will be 66 point something percent. So this is about the pre-issue and post-issue promoter holding. We can move to the next slide. Yeah, this is about the
Right.
object
So
of
this
the
is
issue.
right. Gautamji, I will just mention the planned capex. We are putting about 12.5 crores for the railway division and the expansion for the existing order book. So I explained that in the previous slide. Besides that, a small loan is being retired, and the balance is the major amount is going towards funding the working capital for the projects at hand, which is about 25 crores, and the balance will be general corporate purpose. Can we move to the next slide? So we'll try to summarize everything we spoke. We specialize in heavy technological structures, have done very critical buildings, time and again, lot of repeat customers because of the delivery track record. Marquee project includes steel plants and the bullet train bridge that are both critical in nature. And other than that, a strong order book is with us, which we continue to see a lot of encouragement for our clients. Uh, so we will use the capex primarily to do better in this department. And finally, our production capacity, which is at 36,000 tons currently, and the end of the capex will try to, or we'll rather bring it to totally 48,000 tons per annum, and participate more for some of the mega projects that we already do. And can we go to the next slide? So a little bit more about our railway certification that we have got for RDSO. Um, so we'll be doing more work in that department, and uh, the capex that we have planned is for the railway department will hopefully get us more projects. And again, we have done these projects with so much precision and adherence to quality and time that what flow should not be an issue going forward for our new division. And finally, the can we have the next slide? Yeah, and finally, a little bit summary about the workshop. We have two workshops. One is in Umargaon, the other one is Kapoli. We are doing complete products in-house. There is no dependence outside on any vendor. The complete technology and manufacturing and assembly is done by the company in its own premises with its own team. And that is our strength really. And very high utilization levels are there, and hopefully going forward we will maintain the same level of utilization and try to at least if possible even take the company to greater heights with even greater production targets. Thank you, viewers. Thank you, everyone. I think from our side, this is what we wanted to say, or let you know about the company. We are trying our level best to make Carbon Steel as one of the most premier fabrication brands. uh, we are glad that you will be joining us in this journey. Thank you.
Thank you. Thank you for the presentation. We'll now start with the Q&A session. I request all participants to post your questions in the comment box. We have our first question from Mr. Arav Banerjee. How have you evolved since inception?
Yes. Like I said, we have started right from the grassroots level, from basic steel supplying. We evolved ourselves into making profiles and cut to size steel for our customers. Then eventually we took our pool of engineering clients and formed Carbon, from where we learned to further do contract manufacturing. And based on, after learning those dynamics, we first put up our facility in 2014 in Khopoli, and we have been encouraged so far with number of projects across all the industry that we mentioned in our presentation, which include steel plants, data centers, high rises, infrastructure projects, and chemical refinery units. So, bit by bit and industry by industry and client by client, we have evolved. And today, we are proud to say that our clientele and our work that we currently have has really, shaped in a very, very positive manner. And we see that for the foreseeable future, there is a lot of excitement and lot of jobs in the market. In currently what we do, our niche of heavy precision structures, although being a niche, has a wide application. Wherever you can think of a steel building, we are able to, instead of a civil building, it could be commercial, it could be even residential for that matter, or it could be industrial or infrastructure. We can deliver on all those ends.
Thank you. Next question, please. Ajay Gupta. What differentiates Carbon Steel from other structural engineering and fabrication companies?
I think Ajay, it's a good question. One of the main thing that we do is, first of all, we our major focus is on heavy fabrication. So when I tell you that we handle a single component of 40 metric ton, yeah, not all structural engineering companies can handle that kind of components. They are not only overweight, they are even oversized. So a normal structure coming out of carbon steel could be 5 meters wide and 108 meters long, and it requires like a 1500-ton crane to lift it in place. So that kind of handling, fabrication, and technologies for such heavy structures are not common to find. Number one. Number two is that, so far, all the clients or the industries that we have delivered, our quality and repeat customers have been so phenomenal. I think even though all of our products are custom made, that being said, what I'm trying to really tell you is, each component is different from the last one. Everything has to be approached fresh. There is no building that looks the same. We have, with our engineering team on the drawing board, every time delivered our projects with a lot of precision, both Japanese or the bullet train team put faith in us, and we have come out with flying colors in that as well. I really feel that, that is something which is uncommon, and at the same time to do it in such high tonnages, it is not very common. Most structural engineers cannot achieve so much tonnage, or they do mix of products, and this is just one of their activity. But for us, this is the concentration item and absolutely specializing.
Thank you, sir. Next question, please. Anandi Mittal, how do your certifications enhance credibility with clients?
I think Satish is our technical lead. He will tell you a little bit about certification on how they help with our clients or jobs.
Yeah. Uh, we have got our RDSO certifications done. This helps us bid for railway projects, uh, for very marquee high speed rail NHRCL and high speed rail projects as well. So definitely all the certifications which we get or which we apply for helps us build credibility with our clients.
I think I'll just add to that, it is sort of a pre-qualification. Only then you are allowed to do certain jobs. Specifically, railways will never allow you to do any job unless you have the RDSO certification. And that being said, for each client, we have different requirements, both in terms of welding and fabrication credentials and material credentials. Only when we get those credentials qualified, we are allowed to manufacture or handle their jobs. And we are very proud to say that some of the clients have resident offices in our units. So that being said, our audit and our quality requirements are on a 100% constant monitoring, which you can imagine the amount of due diligence that we do on a daily basis. And that is what keeps us on our toes, and our client continues to have faith in us.
Thank you. Next question, please. Anurag Shah, what role does management experience play in driving the company's growth?
I think quite a bit. Of course, when I say management, I try to mean my entire team, senior team, who manage the company and the production and the clients on a day-to-day basis. I'll tell you that I have 20 years of experience in sourcing of steel, and also a lot of experience with clients and banking. So that is what, when we make a fabrication, 70%, 60 to 70% of the cost could be steel. And that is something that me personally is trying to always monitor and drive down. Satish has more than 20 years of experience in project industry. He has done so many challenging roles. He has put up entire units for a number of clients in metal and oil and gas business. So that being said, he brings a lot of experience on the table on how to approach a job. Ganesh here is with the banking and finance and accounting since almost 10 years with the company itself, and he has another 4 to 5 years of experience with other companies. So of course that is on a daily basis we all have our roles that are driving the company's various functions. And other than that, I always like to mention my plant team. I think they do a phenomenal job. We have key account managers. Every customer gets a key account manager who drives everything, the entire customer experience, right from the point where we start getting drawings all the way till the delivery. And he is handling complete data from inception, and also making sure that quality and deliverables are met as per customer expectation. These and there are many more such great team players that we have. And I give complete credibility when it comes to success for any company to my team. Individually we can do only so much, but together we have built carbon, and I see that with time we'll only have brighter minds with us to do even better.
Thank you, sir. Next question, please. Bharti Agarwal, with two plants at Umbergaon and Khopoli, how do you optimize synergies between them?
Bhati is a good question. I will tell you, we usually split our jobs between the two workshops. So ideally, they are both doing different jobs. So technically, we don't need to synergize anything. There are only certain times when both are working on the same job, but that kind of synergies are done by our project and planning department, which is based here in the Andheri head office. It's a very operational question, but yes, it is required sometimes.
Thank you. Next question, please. Vimal Gandhi, heavy steel fabricated structures form the largest revenue share. How do you plan to diversify further?
I think this question I would like to answer in two ways. Number one, there is nothing wrong in heavy steel fabricated structure because it is applied to a number of industries. Like I said, there is thrust in smart cities, there is thrust in railways, there is thrust in infrastructure. Then there are traditional business of steel, oil and gas, which we already do. So trust me, there is enough revenue streams or enough work available within that sector. Other than that, if I was to tell you how do we diversify, we are already doing putting up a railway division which is going to specifically look into railways. There are other developments also which we will talk about in future, but railways being a focus area, and also like I mentioned, the high rises and data centers are also exciting sector that we will see diversification in coming years, and that way the product mix will change. But yeah, but like I said, heavy steel fabricating in itself is not something that we, in fact, that is a niche where we are getting a lot of opportunity.
Thank you, sir. Next question, please. Chaitanya Deshpande, how important is repeat business to you, to your revenue model, given 96.6% revenues came from repeat customers in FY25?
So, I mean, it is, more than important. I think it is sort of a privilege that we are getting from our clients. They come to us again and again and don't want us to be replaced by anyone. So, as far as it is coming to us, we are happy to have it. But that being said, like I said, there are number of sectors and number of areas where we can participate. So there is no dearth of area. Today we are having to refuse a lot of work because our existing client don't want us to go anywhere.
Thank you, sir. Next question, please. Krisha Damani, how do you balance EPC contractor projects versus direct industrial clients?
So, Ms. Damani, I'll tell you how it pans out. I'll give you an example to explain this. For example, ArcelorMittal is putting up a steel plant in Hazira where they are trying to take the production from 9 million tons to 15 million tons, right? Now it is a mega project requiring more than 6 lakh tons of steel, correct? Now the way they differentiate, in terms of the jobs, is when it comes to blast furnace. India's leading engineering company is considered a stalwart in that sector, and they've had almost 100% success rate when it comes to such packages. So why a certain job goes through a EPC really uh, happens because of the license they have, or is because of the technology advantage that they have, and they are largely successful, so the client does not want to take chance, and that certain package from that mega site is given through a EPC contractor where we also participate. And then there are certain buildings which are galleries or certain mills that do not require any particular technology or can be handled by the client's own project team. Those are approached to us directly. So those are the situation where one site can have jobs coming through two different sources, but technically it is a same site, and there is no reason it is split because of us, but because of the nature of the job, it comes through different channels. But the balancing part is, as far as we are concerned, it is production planning, and we have a certain production to sell every month, and we make sure that it is allocated as per priorities and timelines of all our clients, for that matter, not only the two categories. Whoever is there, there are certain commitments and certain timelines that we understand based on our current order book, and we make sure that whatever new jobs or whatever work planning we do are basically fit in those timelines before we say a yes to a customer.
Thank you, sir. Next question, please. Gokul, which sectors, steel, railways, oil and gas, refineries, are expected to be your biggest demand drivers?
I would like to go with steel and railways, uh, but things can change.
Thank you. Next question, please. Chandan Singh, having crossed 200 crore revenue in FY24, where does the next growth phase come from? Deeper penetration with clients like Arcelor Mittal, new large accounts, or expansion beyond Gujarat, Maharashtra?
Uh, of course, since we have repeat business, there is repeat work coming from existing clients. So that part is true. But that being said, we are getting a lot of recognition since the last 1.5 years because of some of the large and marquee projects we have done, and we are being approached by new large clients every day. And going forward, you will see new announcement of newer clients and newer work. So yes, new large accounts are there on the cards, and territory, as far as I am concerned, I think if a customer wants heavy technical structures, they will take it anywhere in India, irrespective of where the site is or where the client is. For that, for us, historically, that has not been an impediment. Clients have preferred us even as far as Assam or Orissa. So I will not say that is a limitation, but yeah, both existing client and new large accounts will give us growth going forward.
Thank you. Next question, please. Chandan Singh, what is the margin difference between trading versus value-added manufacturing? What sustainable EBITDA margin do you target given competitive pricing pressures?
So historically, trading PAT margins are really low. You can check with a lot of I think if there are any listed trading players, you will check. I will not like to comment on that now. We are not doing any trading anymore, so it is not correct for me to answer that. But as far as value added manufacturing, currently what we are doing in our heavy engineering projects, our typical EBITDAs are from 13 to 15%, and when it comes to technological or railways, it is around 18 to 20%. And as far as EBITDA uh, margins are concerned, we are, we are hoping that it will improve because of fixed cost, uh, spreading across a larger uh, production, and then also going forward, we feel that our financial cost, etc., should come down. So hopefully the margins will actually do better going forward, and also the product mix, where we are trying to work on products that have better bottom lines.
Thank you, sir. Next question, please. Abhinav Verma. Does this concentration pose a risk of over dependence on a few large accounts, particularly ArcelorMittal, Nippon Steel?
Like I said, they require about 6 lakh tons in a particular site. Then there are other recent steel player also announced 30,000 crore expansion, and there are metal plants. Then there are oil and gas expansion. There is infra expansion. So no, I will not say there is a over dependence. It is a choice that we have taken because the client work and the margins or the payments. Those are the criteria which would decide why we would go with a certain business, and that in no means would say that we don't have other work or we don't have choice to do other work. We always have choice to do other work, and you will see that going forward. There will be newer clients or newer sites that we participate.
Thank you. Next question, please. Umbergaon is already operating at close to 95% utilization. What risks do you foresee if demand continues to rise before the additional 12,000 MT capacity
Yeah.
expansion is commissioned?
That is a real potential risk of losing business, which we don't like, and that is why we are trying to do the capex and capitalize on additional order books that we have, and we can even get more if we have the capacity. So I think definitely we want to do the capacity expansion as quickly as possible.
Thank you. Next question, please. Falgunoza, what is the land value of Umbergaon facility?
Can we answer that? It will
I
be
think the cost price, I don't know, matlab, if you can tell the cost price and average price. How much land we own?
So totally we own 16,500 square meters, and the remaining is on lease. And the land value, I think it is better. It is. Uh, can we give a balance sheet figure on that?
Can we give the factory land and building value as per balance sheet?
Yeah, that's okay.
So as per
I think that gives a fair idea. 16,500 square meter, right?
yeah.
Yeah, so I'm sure Fagunji can compute the valuation. I think we can't speak the exact value over the call.
Yeah, that's it.
Okay, thank you, sir. Next question, please. Chirag Panchal, what CAGR do you foresee for revenue and profitability over the next 3 to 5 years?
This
I think I'll just. I think it's a futuristic statement again. But as Shrenik sir mentioned that we are planning the capacity of 42,000 to expand 42,000, which is total 48,000 metric ton, and then 6 to 7,000 per month. So accordingly, generally the realization is 100 and 110 on average. So that's what the plan is.
Thank you. Next question, please. Siddhika Maran, how will the planned expansion of
I
48,000
think
metric
question is same.
tons?
The conversion is as 100 and 110 rupees on an average, 100 rupees lump sum. I think since the revenue is growing, the fixed expenses remaining the same, and we are allocating a lot of amount towards working capital requirement, the margin should improve. That's what we believe as of now.
Thank you, sir. Next question, please. Advait Reddy, across metros, bridges, and refinery projects, what do you see as your strongest competitive advantage? Cost efficiency, technology, execution speed, or established client relationship?
I think all of these are our core strengths. The cost efficiency which we bring about in our Umargaon facility, of course, the technology which we have employed, automatic robotic welding, the speed of execution. Definitely, speed of execution is one area where we have been concentrating, and that is how we are able to do 3,000 metric tons per month. Uh, and of course, established client relationship again helps us, because that is why we are getting 96% of our repeat jobs. So that is all these four are our core strengths. So that's our advantage, anyways.
Thank you, sir. Next question, please. Prathamesh Gandhi, how do you mitigate project concentration risk? Give large ticket size contracts, given large ticket size contract.
So what, as far as we are concerned, project concentration risk is not a risk at all. It is by choice. We try to work in a particular site or a particular project, so that we are able to get maximum out of maximum extraction out of the opportunities available. For an example, ArcelorMittal requires 600,000 tons, that is 6 lakh tons, to be manufactured, and we are only serving them at 36,000 tons capacity. So we try to maximize out of the big ticket projects, which gives us ease in operation and ease in to get the production better production out, because of the ease of operations with a particular client, and what client requires, we know better by the time the project is under execution.
And also, when we take up a big site, we are doing a fair bit of research into how the client is well funded or not, what are the
Yes.
payment terms, what is favorable to us. So there is always a analysis done on if I may say, cost versus benefit. And if we see that outweigh clearly, it is only then we commit to a large size contract.
Thank you,
Otherwise, there
sir.
are options to do two or three contracts at a given time. But like I said, those should be your guiding principles.
Thank you. Next question, please. Nikunj Patil, what is the key rationale for going public at this stage of growth?
I think, Mr. Patil, the sheer size of order books that we are getting, we are having to grow at a very fast rate, and that is one of the reasons. And also, we want to participate in even bigger and larger projects going forward. It gives us that much, recognition and visibility to our client, and it also portrays a sense of reliability that we can, do even more work for bigger projects. And uh, and uh, that is the reason we are, trying to go public and capitalize and the order book that we are having.
Thank you. Next question, please. Suraj Joshi, how do you intend to strengthen your client base beyond existing blue chip clients like ArcelorMittal and Tata Projects?
So, as we talk, we have inquiries from a number of different clients. I think just because we could not name a few, or because there are forward-looking inquiries that we cannot discuss, does not mean that we have a small basket of clients. That is absolutely see that orders will flow from very, very different clients. And trust me, the USP here is the technology and the capability to make these goods. It does not As far as there is a client across all these sectors doing all these jobs, they will not mind having carbon in their team. So what really matters is the job and not the client name. We will qualify and we will work with other clients.
Thank you, sir. Next question, please. Looking forward to the IPO. All the best.
Thank you, Mr. Google.
Devesh Purohit, best wishes for your IPO.
Thank you, Mr. Devesh.
Chandana Deshpande, great line. Sir,
Thank
I
you.
think we have covered majority of the questions. Thank you, Shrenik sir. Thank you, Ganesh sir. Thank you, Satish sir. Thank you, Gautam sir.
Thank you, Ms.
All the
Devesh.
best.
Thank you.
Thank you,
Thank you,
Sejasji.
Gautam.
Thank you,
Thank you,
Shreya.
all the viewers.
And
Thank
Ganesh.
you for
Thank you.
having me.
Thank you so much.
Thank you.